Welcome, everybody. Good morning. My name is Ephraim Lindenbaum. I'm the managing director of Advanced Ventures. We're a Silicon Valley-based venture fund founded in 1999. We've invested for the last 26 years. We broadly invest across technology, health, and wellness. We've been investing in AI since the early 2000s, had a meaningful exit in 2004. So we view this as the third or fourth coming of AI and been actively involved since it started to spin up again in the late teens. I think that's really what's separating our investment thesis in AI from, I think, the broader set. The investors on the panel would probably agree that building apps on top of some of the larger LLMs are really mirroring sort of the mobile or initial web hype curves that existed, right? You're essentially building upon other people's tech. What we're investing in today is distinct LLMs that the companies are developing proprietary IP around, proprietary learning. This applies in cybersecurity. It applies very, very actively in healthcare, defense tech, and many other elements. I think what we're finding today is the ability to spin up a startup on top of these platforms is a weekend adventure. We still have all the hallmarks of a good company that we look for, domain expertise, go-to-market strategy. But then if their underlying LLM, their underlying tech has really been built on others, then the proprietary value is limited. Now, that being said, there are certain areas in enterprise where the methodology of action, where the agent technology is valuable to others. So you have two distinct areas there. You've got the early exit capacity of building features versus companies, and then you fundamentally have the deep learning LLMs that will ultimately be the leaders in their respective sectors. I think we broadly look at it in two buckets. We've got better, faster, cheaper, and brave new world. And, we really rate startups with that capacity. And that really develops a lot of our thesis around each respective category. Building unique, high value LLMs in distinct sectors is very meaningful and can in turn develop into tremendous businesses over time. And then you've got your better, faster, cheaper. You've got application layer enhancements. Those are traditionally what we view as early exit M&A opportunities. Can you add value to a Mag 7 player in a distinct area that'll lead to an M&A? And then you can move down the, essentially scale side on that and move into different and distinct sectors as it goes. I mean, we've already really moved into what we broadly look at the unique agentic side of the story. I think companies that are coming to us built on ChatGPT layers are a bit passe, for lack of a better term. We've really moved into other sectors and really other geographies. I mean, we found that building AI in the United States is very, very challenging. Talent pool is very challenged. Cost, access to data, whether it's inference or compute, is very expensive. We've just started funding a number of companies in the EU category there, access to compute and inference. And frankly, talent is very meaningful. We've just done a cybersecurity deal over there with Agentic Security, which is very meaningful, where the average cost in, let's say, France or Germany of top tier PhD AI talent is 140,000 euros a year, whereas here that number is a factor of potentially 10x of it all in. So, the ability to scale in terms of talent, ideas, et cetera, is requiring movement, right? So we're seeing those pieces as well. Application layer is its own sector, and building meaningful tools there that fit into the ecosystems of other larger players can lead startups down a very effective high return M&A path. I mean, certainly that's one of the core factors. So when you're looking at a company and they're telling you about their ultimate product, their service, et cetera, I think having a data privacy component is very important. Again, a lot of it depends on their LLM. We focus a lot of our time on areas like health tech as well as cyber. I mean, these are underlying elements. There's fundamental in many of these sectors that are required, whether it's healthcare, you've got underlying HIPAA requirements. There's a lot of angst in the healthcare sector around this technology. agentic transactions. As I mentioned, we're active in cybersecurity, and that's several tiers down the road in terms of agent to agent level security. So at a base level, that needs to be part of the thinking of the startup early on for data protection. But then sector-based requirements often move the ball along. We have defense tech companies where the security side is fundamentally, or privacy side even, is fundamentally brought to the table via the government, via their customers, et cetera, and then ultimately the global threats that are out there. A second data point out of an entrepreneur's mouth when they're selling into enterprise needs to be the security story, right? This product does X and it is secure Y. Because if you're looking to get into the broader enterprise cycle, the first fear point is going to be security, whether it's customer data, whether it's proprietary business data, et cetera. Coming back to every other hype cycle, the underlying is this a feature or is this a company style model is really rapidly evolving. I mean, it's so easy to spin up an AI startup today. We're seeing very much a lack of deep knowledge and deep sector focus coming in from many of these startups. If you're going to bring us a real estate tech startup, you need to have the underlying sector experience to understand all the parties there. And just like any other business, you need to have the team in place. You need to have the elements in terms of the network, et cetera, to make it successful. So again, feature versus company and agentic to agentic businesses, which require a much deeper tech prowess, are really what we're looking at on a day-to-day basis. We're seeing AI integrated in those core functions throughout the enterprise already. When you look at the customer facing elements, CRM, sales, pipeline, dashboards, we're seeing AI broadly used across the elements. That's always the tip of the spear, whether that was with marketing automation, whether that was any level of advancement out there, because it's very easy to quantify the ROI associated with all of that, right? You essentially have, did you sell more product with the use of AI or did you not? Did you get more meetings? Did the customers respond better? So there's a much easier element to work with there. We're starting to see it working across the supply chain, especially when we have a global crisis like this. AI is highly effective across the supply chain. So those are the areas that are, I think, most important. Now, what we see as one of the most interesting aspects, and this goes back to kind of the Apple model in the late 90s, early 2000s, which is what are the teenagers and college students using? And there, the proliferation of AI is massive. It's being used in their homework, it's used in their studies. There's a huge rush of all the, administration to provide tool sets so their professors can identify it. This is very critical. And when I harken back to the Apple model, today across the tech world, Macs are ubiquitous. 20 years ago, 25 years ago, that was not the case. And Apple made a distinct advantage throughout the 2000s to get those Macs into the educational system at a laptop level. And we've seen others, if you want to look at someone like Synopsys or Cadence, particularly Synopsys, moving into that in the chip design area, getting that into the educational system. So when, students are graduating from university, their platform they understand is the one that they're going to use in the workforce. And what we're seeing is that happening broadly across really the high school and college levels. And that means that when those students come out, AI is an active part of their daily routine. I mean, it is expected to be used in their workflow going forward. And that's mission critical. The question is who's gaining over who? And I do tend to try and monitor that through friends with older children and college age students. I will tell you that there's a distinct advantage right now for Claude. There was a huge push as this little micro stand against the US government. Claude is gaining against ChatGPT as a favored use case model. We have the Chinese AI models nipping at the buds there. So, a lot of the future here is going to end up coming out of that environment. Where are they more comfortable? How are they using it? I just saw some data this morning that suggests the UI and UX components of applications are going to change because the essentially chat interface, which a lot of these, younger educated folks coming out of university has used essentially as its starting point, is going to become more and more the interface of choice. And so, distinct UI, which has been a very important part of building enterprise apps, building consumers apps throughout the years, is potentially going to change radically to more of a chat-style environment where you're essentially starting with that and opening and then moving from there. So those are all very fundamental shifts that are going to change the way we look at application layer and interface layer over the next 10 to 20 years and beyond. Yeah, robotics as a service is really something that's going to touch all aspects. And I think defining that statement is just incredibly broad. You can start at a farmer with autonomous machinery. You can start in the healthcare space with autonomous surgeries. You can start at pretty much every level out there. Once you get to the software level, it changes a little bit. At least here in Silicon Valley, it's a very common thing to see Waymos driving around the streets. We now have Zoox moving out there. Amazon just cut a deal with them this morning as their front-end deployment model. So, the consumer's probably going to interact first with things like autonomous vehicles. They might have a Tesla and be trying it already. Many of the GM and global players have started to do more of that. But that's going to really develop further and further into the model. I think we see supply chain, logistics, elements like that, especially in the transportation business being highly motivated. We see the construction business being highly motivated there. And, the rental tool model, if we're going to use physical goods here, for example, which is a really nice one to work off of, is something that's really well understood. So, being able to move smarter, more effective machinery into that and making it, spaces there. Now, when we move to the software side, that gets very interesting because of the tokenization model, especially as I mentioned, college students and beyond understand a token world and understand a mechanism where they're paying for their compute, paying for their inference. So being able to essentially SaaS, or as we like to say on the hardware side, HaaS just about anything, is becoming very viable service. So that's been out there for a long time, and that's a really comfortable way of redefining and marketing the leasing business. I think that's something that we've frankly seen for a long time. I mean, when you're dealing with robotics, the underlying control systems have had a tremendous amount of machine learning for a long time. So when you kind of couple those two pieces together, there's been a lot of things happening there. I mean, I think the elements that we're really looking at today is security. I mean, what's very interesting is one of the categories that has been left off the table is 5 and 6G mobile security for the autonomous world there. We're already starting to look at agent-to-agent security model, behavioral security within those agents, and that's a very challenging category today. It's a very open hole within the model. Communications there are nowhere near the secure levels we need to be. But fundamentally, if you're looking at, let's say, warehouse robotics, the control systems that are driving that are probably some of the more advanced systems already. So that disconnect is probably less so than just about anywhere else in the space. The fundamental business wrapper that is akin to venture has not changed. You can take any respective piece of technology, plug it into the wrapper, and basically say, is this a venture scale business? I think you need to potentially rethink your TAM within a lot of these elements, but in a lot of ways that has happened during many other technology, curves or technology hype cycles as we've seen in the past. I mean, our belief is the business wrapper on a venture business is very much the same, whether that's the ability of the founders to leverage as much external support as they can, to be able to pivot, hit adjacent spaces, all of those hallmarks, I think we find to be venture business hallmarks. And whether you're talking about, healthcare imaging with AI, or you're talking about industrial scale robotics or defense tech, all of the same elements appear, and the same DNA that we like to see in our teams really move across. And it's interesting because when you look out at our portfolio, and we've done now at this point, hundreds of deals over the years, you tend to see a lot of the same hallmarks. We have teams in our portfolio that we've gone back to and we funded 4 or 5 times, and they frankly could come to us with an automated plunger today, and we know that team will find that exit. They just have that business wrapper that you can really wrap around anything. And I think that's what's super important about AI, and especially from an investment cycle, is not losing sight of the fundamental elements that make a deal venture fundable. There are lots of great deals out there that are great potential businesses, but putting yourself as an entrepreneur through a venture funding cycle and really have to adhere to the rigor and the exit expectations that we have is not something for everyone. And what's great is today there are lots of different ways to achieve funding. There are lots of different approaches to building businesses. I think we often sit back and give entrepreneurs a nice nudge and say, hey, look, we think what you're doing is great. We think you're going to be a really wealthy person going forward. But maybe this is a 20 or $30 million total business in the next few years, and that's great for you, and that's a very successful business. Unfortunately, that doesn't meet what we need to achieve in terms of returns for our LPs. The POC trap is what we call it today. Just to give you an idea, no names, there's a bank here on the West Coast based out of San Francisco. They have 50 plus POCs in the AI category running. They will put you in a sandbox. In our mind, if you go into the POC sandbox, you will never come out alive, right? It's what we found is great venture teams, back to my statement around a good venture wrapper, understand GTM, that's go to market, understand how to move in. We can certainly be surprised by younger entrepreneurs, but the age or the experience doesn't necessarily form the hallmark, although it helps inform us. But GTM is GTM. When we see a team that's got a great, GTM leader on the sales and BD side of the world, even surprisingly on the CTO side that knows how to get their products in our mind, the product is less important than their ability to get it in there. And like every other technology curve here, many of those great products will never make it. It goes back to the old teens 2000 saying of no one ever was fired for choosing Microsoft, right? And you're going to end up back in that bucket at some time. And as we see ChatGPT and Claude get more baked into their respective elements, what can get done in-house versus what comes in from the outside becomes very important. And there's security, there's other elements involved in this. So I'm very wary of the POC trap. To us, what's always been the case is customer feedback. If we can get on the phone with the customer and they say, we can't live without this, that's the magic button to us. And if you have one, okay, that's a good story. When you get 3, 4, 5 customers saying, look, I love this thing, I'm willing to write you a check for it, I will find the budget somehow because I can't live without it, that's your home run. And so we're really looking for those elements and breaking into it. Now, in different sectors, that's going to be a little bit different. You have to look at the GTM side of the business. If you're dealing with a healthcare startup, we're very active. The first thing we look at is, do they have a reimbursement strategy? Who are they going to go sell it to? And, we love to see good, well thought through plans in that case. It's the startup that rolls in and says, I'm going to go sell this at the front door of a hospital, that we go, doesn't matter what you have. Your magic dust will never make it in the front door. You're going to have to sell this to an overburdened administrator whose first thought is who's going to pay for it, what's reimbursement. So, all of the same hallmarks of building a business exist. You just have a new piece of software or a new piece of hardware. And all the same elements around ROI and everything else are still going to apply. If you're outside of your hot Chicago, Silicon Valley, New York, and many others around the country, you can pick your Austins of the world. It's really tough. I mean, it is so easy to spin up what looks like an incredibly robust AI business very quickly. Find a couple of quick customers that are willing to give you a few bucks, and without the due diligent capacity, et cetera, to really understand how that plays in the market, to understand, more importantly, what's been funded that's not visible out there is very important. And if I was not here as an investor, I would be rethinking a lot of our thesis. My ability to go and have lunch with my friends at a bulge bracket VC like Sequoia or NEA, et cetera, to have boots on the ground with friends at, Claude or OpenAI, senior execs there. You're never going to get the whole story, but you're going to get enough pieces to the story that investing in a startup that, does X, Y, Z, and, knowing a team inside Claude that's, Anthropic or inside OpenAI that's currently working on that is a pretty good tell that, you probably shouldn't write that check. And without that intelligence, it's a very challenging space to do it. So, there are a lot of different areas in the world you need to keep track on. But as an angel investor, now is probably the most challenging area. So, we encourage people to thread in behind the bigger players, thread in behind larger orgs. I mean, certainly alumni. I mean, we invest, alongside or as a next level with angels all the time. We have groups of angels as well as thought leading folks here in Silicon Valley that we often invite to deals because their knowledge base is very critical. If we're doing a cyber deal, getting our friends from all the cyber companies, whether it's here or Tel Aviv, into that deal is really, really helpful. You know, if they're willing to go to their companies and get the approval, that's super important. But we need that element. That also is the pathway to M&A. Quick M&A is something that's very, very meaningful in the AI model. You know, there's a lot of cash on the sidelines with the bulge bracket companies, and they're willing to write checks very quickly to bring this tech in-house before real competitors emerge in their categories. Investing alongside alumni, I think those things are really important, and being able to run a much deeper due diligence cycle that they had in the past.